Hi guys, welcome back to another lecture of your path to excellence in technical analysis playlist. So today we'll be talking about inverse fair value gap, which is also known as IFVG. So we'll talk about that in this video, how you can use that, what are the best condition to use the inverse fair value gap. I'll talk about all these points. So make sure to stick to the full video. You're probably gonna learn something new today. Um, so first of all, I think majority of you guys already know what is inverse fair value gap. So an inverse fair value gap basically is when price inverse a fair value gap. All right, let's just put it that way. So imagine price in a bearish condition or is moving down, and we have a CB right here, or bearish fair value gap. So what do you expect in when price taps into that? We expect price to sell off from there, right? But instead of doing that, price close above that gap and push higher, or do the exact opposite thing. All right, and this scenario is here when price is in a bullish condition or in a bullish market. We expect price to respect that BC or bullish fair value gap, and instead of doing that, it inverse that and go down, right? So these are the two kind of two inverse fair value gap that most of you guys know. So we'll talk about that, and I want to show you guys the price action of Nasdaq for this week. So as you can see, if you look at here, we had two CB right here, sell side imbalance, buy side inefficiency. So what do you expect usually? Like whenever we see CBs, we expect price to retrace into these imbalances then sell off, right? Because as you can see, we're in a bearish condition, but there's another way to use these this fair value gaps, because not every time price will respect all those CBs or all those BCs. They can inverse them certain times, and in this case, look, this first CB right here, we inverse that with this huge up close candle. All right, the last week we inverse that, and the next candle we close back within this candle. So what do you expect? You expect price to sell off. It did sell off from there, but what did it stop? It stopped on that first inverse fair value gap, right? This one. Now why this is a important level for you? How do you know that uh, which inverse fair value gap to use? Now this is for your note. If you're watching this, I really recommend you what I'm saying right now. Take a note. All right, the best condition to use a inverse fair value gap is when there is a sweep of liquidity. You probably know that, but you have to see a liquidity sweep on a major liquidity levels, whatever you say, but it has to take out some sort of liquidity. All right, not something like on the minute time frame or 1 minute time frame, but a higher time frame liquidity, something like this. Then you go drop down to a lower time frame, or if you expect price to maybe reverse or retrace back into the range, some of the range, then you could use those gaps. But there's one more thing. Look, this gap formed before we swapped this low right here, and this gap formed before we swapped these lows right here. Are you getting that? So whenever you see some CBs or BCs forming before we are sweeping some sort of buy side or sell side liquidities, and those gaps are still intact, many times you'll see price just inversing them or going through them with no resistance or whatever. And that's when you use that information to look for the opposing direction trades or whatever. Like in this case, even if we were like bearish when price inverse this, I wouldn't be like looking for sells. I wouldn't be looking for shorts. I would be looking for longs from this position. So if we go on hourly time frame, now look here, the same thing I just told you. this might be a huge gap, all right, but it's still a inverse fair value gap. All right, I'm gonna take, so all right, let's get this straight. So when price retraces back into the lower inverse gap on the daily time frame, what do you expect? We expect price to push higher, because that was a fake move to the downside, trapping more sellers, thinking that that CB to the upside gonna be respected. All right, now there are psychological part you have to understand about the market, and you have to use those information. All right, and over time you'll get those experiences. uh, you just have to do it. Like when price dropped from the our first CB on the daily time frame, where did it stop? It stopped on this, right, on this daily inverse fair value gap. Then what it did, it inversed this gap right here. Look, so we're gonna see what time was that. We'll see what time was that. When did that happen? It happened during the New York session, okay, right here. So it'll go on the 5-minute time frame. So let's see if we can use anything from there. Okay, so it inverts that during the New York session after the 9:30 opened. Okay, you don't take trade at this moment. You can, but at that kind of moment you have to have a bigger stop loss. Maybe put your stop loss below here. But what you can do is that whenever you see this kind of gap getting inversed, or on the 5-minute we have other inversion fair value gaps. Like, so this is the key right here. Okay, so if we think price is gonna push higher through this gap, how do you want to see the pattern forming? I want to see price first selling off, which is the best condition. It's not gonna happen all the time, but if it does, you wait for price to get back above that gap. Why? Because when price was maybe we are on the 5-minute time frame right now. If we go drop down to a 1-minute time frame, you will see that there are maybe multiple candles to like down close candles. So people are thinking that we are going to respect that imbalance and going to sell off towards these lows or whatever they're targeting. So you wait for price to give you that fake move, all right, and you don't engage with it, and you wait for price to inverse that the second time, and that's when you press your button, right? That's when you press your button, and then you can just place your stop loss something like this, or below that inverse fair value gap, and target some low resistant liquidities like these highs. So you could see, if I even drop down to a 1-minute time frame, we could even see more precise entries there. But there were multiple inverse fair value gap. Like here we had another CB, okay, but the narrative is that we already dropped to the daily time frame, okay, daily daily inverse fair value gap, where we expect price to retrace back up. So we don't want to see price keep on going lower. We expect price to reverse from that point on. And at this point, look why this gap was significant, because that gap formed before we took out this low and it was intact. Okay, it was not like we have a low here. Now one thing I want to mention, guys, I don't do any script for these videos. Whatever I know, I'm just sharing with y'all. So in that way you'll get the authenticity in all my content, to be very honest with you. And I don't want to like do the scripting, say in a more mannerable way. I just want to give you the information, and if that's what you need, bro, you're not here to watch me or fucking what I'm doing. You're here to learn, so that's what I'm trying to give you. Okay, so look, yeah, so if you use something like this, we formed a gap, we formed a CB, then price tapped into that, then took off this, but we have no CBs within this range. Then most of the time what we see is that I don't like to trade those inverse gap that already been filled already. Okay, but we that's another like concept itself. Will explain that. But the best thing for you to to use inverse fair value gap is to wait for a clear sweep of liquidity, and that gap needs to be intact, and you have to have like higher time frame narratives. All right, what are you looking for? What's the direction? What direction market's gonna go? These are the things you have to know. If you don't know these things, then yeah, man, in using inverse fair value gap not gonna help you. Okay. All right, now in this situation right here, we had this gap on the hourly time frame. All right, so it tapped there. What did it do? It took out these lows. All right, now look here. When it swapped that low, it was still within that daily inverse fair value gap. Okay, it didn't close outside of the daily inverse fair value gap. Okay, and now look what happened. We have this CB right here, which got inverted because that was intact before we took out these lows or that low. Okay, and price inverts that and pushed higher for this buy side liquidities, and oh my god, man, it even moved, I don't know, 1,000 points from there. Okay, I'll give you another example. Okay, I'll give you another example for your entries. Now this might be hindsight, but I'll show you a trade. Okay, I'll show you a trade. Like, look at this one. All right, we took out this low with this move to the downside. You could have used this gap right here. Okay, that this one or maybe this one, it doesn't matter. We had two gaps. Okay, so you could have entered on one of these two. Then we had another gap right here. This was also an inverse fair value gap because we still didn't took out this buy side right here. So what do you expect? You expect you know that people are selling in all these CBs, right? So you want to do the opposite thing because you have the higher time frame narratives that you're not looking for shorts and price is bullish. So you want to see price first trapping sellers, thinking that they probably think that just because we're forming this wicks and forming this down close candle, it's gonna continue going down right now, but that's not the case. You wait for price to push a little bit low. I mean, entice them to add more position to their shorts, and then when it forms a clear swing low, okay, and you have this inverse gap or these CBs, you wait for price to push through that one of these, maybe drop down to a 5-minute or 1-minute time frame, and you just take the trade, put your stop loss below the inverse gap or below a 1-minute or 5-minute swing low, anything you like, and you can let it run to your target or objectives you're looking for. So that's how I like to trade inverse gap. And for a sell side condition, I mean a bearish condition, what I'm saying, dude, like, so this is a bullish fair value gap, right? Okay, so what do you expect? Price been moving higher and higher. We've been making higher highs, higher lows, higher highs, higher lows. Even at this point, we made higher lows. All right, so market is enticing people to go long from all these CBs. And what do you do at this kind of situation? As we have already moved like a hell a lot to the upside, all this range are still in unfilled. All right, and this, we didn't even do anything that much that day. So just because we didn't do anything that day, we expect either it's going to push up or it's going to push down, at least for maybe 100 points, right? So look what did NAS do. NAS pushed higher, enticed all these buyers, then inversed this gap right here, and that's when you can literally enter your trade because it's already 8:30. Okay, you could have traded that around 8:30 and had your stop loss above that high, targeted these equal lows. It could have been a nice trade. Then suppose you haven't taken that, you waited for 9:30. Now I'm dropping down to a 5-minute time frame, as you can see. Why? Because I'll tell you why. Okay, so this gap on the 5-minute, this is more clear. All right, Now, I've already made a video on gold strategy. You should watch that even if you don't trade gold, but there I already explained something. So yeah, you just need to watch that to know about it. So we have this nice clean leg before 8:30. So if 8:30 pushes higher and form a swing high below that, and did you had any SMT? Or we didn't had any SMT though at that time, but as you can see, this high took out this buy side right here. And I told you, whenever we see buy side being taken out with the intact fair value gaps, all right, that when we inverse that, that plays a significant role to your trades, and that level of that gap becomes more sensitive to price, all right. And many times you'll see price respecting those to the tick maybe. But look what happened as soon as we inverse that. Say for instance, you took the trade something like this, all right, and you targeted what we shared on the 15-minute time frame, somewhere around here. So that could have been your trade, all right. So that was the trade for you using this inverse fair value gap, because look, we know market is enticing buyers to go long more and more, but if you look all this move to the upside, these are too damn slow. Okay, it's not like you just do the technical science and it'll be profitable. I'm going outside of whatever I'm doing right now, but it's important for you to understand that you have to know about psychology. Like what psychology? Market psychology. I'm not talking about the emotions. I will talk about that later, but you have to know the trader psychology. What's the person behind the behind I mean behind the computer or desktop thinking or doing? What the retail traders trying to do? What that other person thinking right now watching this whole price action? You have to think like him, but do the exact opposite thing. If you understand this, you will do great with in trading, bro. I'm telling you, bro. Yeah, whenever you're using gaps, highs or lows, just ask yourself what are the majority of the people are doing right now, and is there any logic to their point of view, or is it valid that they are looking for such things? And if it's not, then you do the opposite thing. Okay. Okay, this was from yesterday's price action. So we have taken out all these buys. That same thing, bro. I just explained this right here. We have this is a weekly high. This line here is a weekly high. I'm gonna make it bold right here. This is the weekly buy side liquidity. So, and this is Friday. So we have taken out a weekly major buy side liquidity, and it's Friday. What do you expect? You expect price to probably retrace, but what do you see? We see price just tapping into gaps and then pushing higher gaps, pushing higher gaps, pushing higher. What is it actually doing? It's enticing those retail traders to think that we're only going to make higher highs and higher lows and keep on pushing lower. I mean, keep on pushing higher, and you just wait for a clear BC to form. When did it formed? On the 5-minute, exactly here. Look, we formed that here with a clean BC right here. So when I see that, one thing I want to mention, yeah, whenever you see me trading inverse fair value gap, I mostly use 5-minute inverse gap. Then I drop down to a 1-minute time frame. So what did happen? Look, as soon as this 1-minute candle closed below that gap, you enter on this second candle and put your stop loss above this high, the previous candle's high, or wherever you like, and then you could have targeted these lows, all right, maybe these lows, whatever you wanted to target, like these two equal lows or your low resistant liquidity runs. So that was the trade, okay. But you have to think like think the opposite way what majority of the traders are thinking. So ask yourself every time whenever you're trying to trade an inverse gap, all right, whenever you're trying to trade a bullish fair value gap or a bearish fair value gap, ask yourself this question: is this a valid fair value gap, and what other people are thinking right now just by watching this price action? Are they thinking that price is gonna go higher, or it's gonna go lower? And what your analysis tell you? That's another thing you have to ask yourself before trading every BC or every, I mean, before trading any concept. You have to think about the psychological perspective. All right. If you do that, bro, you'll thank me later. I do that every single time whenever I'm trading. I'm gonna show you my Friday's trade. Okay. Let me. So here's my Friday's trade. All right. So what do you see? Even though we don't have a clean BC right here, or but we did had this small BC right here. Could you have entered on that BC? Yes, of course. Why? Because that this move to the upside, we have taken out this swing high and that weekly buy side liquidity. So when price gonna come back to that CBE, I mean to that BC or buy side imbalance, sell side inefficiencies, when price is coming back to that fair value gap, what people are thinking? They are saying that we have created higher high, but they don't know that we have already taken a weekly buy side liquidity, or a major buy side liquidity, a weekly high. So if smart money are selling above these highs, what market is gonna do? Market is gonna sell off for, I think, for a minute or whatever, or for a little bit. So you want to be a part of that sell off, right? And if it's gonna sell off, is it gonna respect that BC? No, obviously no, right? But and to be honest, you have to think exactly of what I'm telling you right now, bro. You just have to use the um opposing mindset, bro. That's it. So I could have, even if I didn't look, I did took this trade with a other with my other strategy, but you can even see that, like, say for instance, you see this candle close below that gap. You could have entered on this candle. Where could you like place your stop loss? Right here you could have placed your stop loss above that high. What could you have targeted? These lows, that pre 830 low, that's a clean price, like, and that was like a almost 1.8 2-hour trade for you. Even though it wasn't clean, but you can see we did respected those. And then look, once we took out these, price inverse pushed higher, than I already explained that. So yeah, man, every time you trade fair value gaps or inverse fair value gap, um, remember to ask yourself what the majority of the traders are thinking just by looking at this. This is the, bro. I'm kind of repeating this or so many times because it is necessary for you, bro. Maybe you'll like realize it later, but the sooner you'll realize it, the better it is for you to understand this kind of situation. It's all a psychological game. It is a technical science game, but you have to know the psychological game as well, right? That's when you'll have that confidence to wait for your setup or think that, yeah, that gap surely gonna hold price, and probably that gap with price gonna inverse that gap. These are the things. So yeah, man, I hope you guys found this video insightful. If you did, make sure to give a thumbs up, please. Give a thumbs up. And if you're new, if this video helped you, subscribe. And yeah, man, make sure to check out Lucid Funding, 50% going on. I mean, not 50%, I think 40% discounts right now. So you can use my code NEXTGEN. And if you want to trade live, check the link in the description. You can trade with Bybit. I trade with Bybit. So yeah, man, hope you guys like the video. I'll probably try to bring the next video pretty soon, but I'm busy with all the other stuff. And yeah, man, it's a bit uh, difficult for me to manage all this shit by myself. So still, I'll try to bring the videos pretty more quicker. And yeah, man, I'll probably catch you guys on to the next one. Till then, be safe, take care of yourself, your mental health. Peace out, chat.